Hello and good morning. It's the 21st of July. We are Talking Ball. I'm John Aber, and today is the latest edition of our video podcast. So, important day ahead. We've got ECB their policy decision, also a press conference. So markets will be pretty much on pause, I believe, until that time. Let's get stuck into the latest headlines to see what else is moving markets at the moment. So yesterday we had US home sales slide. The existing home sales declined to an annual rate of 5.12 million for June from 5.41 previously, and that was below the consensus forecast of 5.38 million, reading its lowest number since July 2020. The data maintain concerns over the housing sector, and of course, this is also being factored into the Federal Reserve's policy decision when it comes to, what they're going to do next with monetary policy. In terms of the Euro consumer confidence number, that dipped again, and it dipped to minus 27 for July, for a previous number of minus 23.8. The consensus forecast for yesterday's number was minus 24.9, so coming in weaker than the forecast anticipated. As mentioned, it's a big day for Europe today. The ECB will announce its policy decision today with uncertainty over the scale of rate hikes. The bank is also scheduled to announce its new tool to contain periphery bond yields. There will be volatile trading in euro after this decision, no doubt, especially as there is also some Italian political uncertainty being thrown into the mix. Prime Minister Draghi is expected to resign. The Italian political developments will be important today. In comments yesterday, the Italian Prime Minister Mario Draghi stated that he would only stay in office if there was unity in coalition partners. There are, however, major splits in parties, and Draghi is therefore expected to resign today. In terms of what's happening elsewhere, there was mixed Canadian inflation data. The headline number increased to a fresh 29-year high at 8.1% from 7.7% previously, although this was below the market expectations of 8.4%. And overnight, we've had the Bank of Japan and their latest round of policy decisions. There was no changes following the meeting, with the interest rate staying at minus 0.1% and a target of 0% for the 10-year yield. The reaction was measured, and there's been no expectations of a change at this meeting. So we can move on now to the charts and take a look at FX first of all. Starting off with the dollar index, which is obviously very important at the moment. It's been really very strong of late, but we have seen a little bit of corrective price action on this over the last few sessions, as you can see here. So price has been contained within this bullish channel in the shorter term. If we scroll out further to the left, you can see how strong things have been for a number of weeks now, going back in fact to May 2021 when prices bottomed out. So the pullback has been quite mild, really. We've got support at 105.78, which is where we believe prices could reach. Yesterday we saw a bit of buying support emerge. If we see a break of this channel and a takeout of this support at 105.78, then that could trigger further losses down towards 101.35. But for now, things remain very much on the front foot. Taking a look at Euro US dollar, we saw sellers step in. Obviously, the flip side of what we've just looked at in dollar index chart. At the moment, we're on the front foot, expecting a lot of volatility in this today, given that we've got that ECB rate decision later on. If we take a look at cable, still unable to break out of this wedge pattern that seems to have formed on the daily chart, maybe indicating some sort of short-term bottom. Still got a bit of work to do. So for now, not really looking particularly attractive. I think we need to get above 120.56, and if we can do that, then that may trigger a corrective move higher, maybe some short covering on cable. Looking at some of the other currencies that I've highlighted today, Aussie CAD looks quite interesting, rallying into some resistance here at 88.83. A number of wicks have attempted to overcome this level, but failed, and we continue to see closes below. So is that going to persist? We saw a decent-ish turnaround yesterday, maybe an opportunity for the short sellers to grab some value on that as long as this resistance continues to cap the upside. Aussie yen on the flip side still looks pretty strong following the breakout of this triangle pattern to the upside. A bit of indecision posted yesterday, but we're up 0.3% as things stand at the moment, so that's still looking pretty robust. Looking at euro yen, this is quite interesting. Obviously expecting a fair amount of volatility in anything linked to the euro today, but this was trading in a nice upward trend. We saw a decent break of that on the 5th and 6th of July before prices then eventually bottomed out at 136.85. And in recent sessions, we've seen a retest of the underside of this broken trend line and posted yesterday a red candle, basically very much in line with that underside of that level. So potential for some further selling there. We'll have to wait and see whether or not the bulls have got the appetite to drive this back up to the highs. Let's look at New Zealand dollar CAD. Similar situation to Aussie CAD in that it is being contained by some decent resistance levels. We're clearly seeing some rejection of these levels as highlighted here by these candles. So we're tempted to move higher here, posting a shooting star, pretty much identical, but although we closed higher in the next session, and yesterday we saw a very similar candle yet again. So is there some value to be had here by shorting into this level at 80.57 and targeting maybe a move back to the lows? New Zealand dollar, Swiss franc, that's rallying into resistance as well at 60.73, pretty much to the tick yesterday. It's a previous swing low from back here in February. Let's take a look at New Zealand dollar, US dollar as well. That completed a triangle pattern or a wedge pattern, broke the upside, but yesterday we posted a bit of a shooting star into the reverse side of the 61.8% fib level. So we'll have to wait and see whether or not the bulls have the appetite to drag that higher, or whether or not we are going to see dollar strength persist. Moving on to cryptocurrencies now. So Bitcoin had a really good day yesterday for attracting a lot of selling interest later in the day. And this was actually linked to what happened with Tesla by stating that, because they had numbers out after market hours yesterday, pretty much beat across the board, but they did state in the notes that they had converted 75% of their Bitcoin into fiat currency. And I think, Elon being obviously a big supporter of cryptocurrencies, that set a few nerves jangling in the cryptocurrency space, and we saw that unwind quite quickly. If we just take a quick look at the dailies, the intraday actually, just to see how that played out. So prices moved really nicely higher, as we can see, and about that point there, 4 o'clock, we saw prices top out. Numbers came out around 9 o'clock UK time, which is why we saw this spike here on the hourly chart for prices moving lower, and they've continued to move lower since, forming a short-term top there on the hourly chart. But overall, on the daily, it looks still okay to me. We've seen this breakout of this triangle pattern, which looks to be a short-term bottom. Maybe we'll see a pullback to retest this 21,866 level before a continuation to the upside. Still looking to target anything between 25,338 to 25,860. Looking at Ethereum, that was outperforming Bitcoin on this break higher. So we completed this triangle bottom pattern. Prices roared to the upside, come up just shy of our first target at 1682. But we've seen a bit of selling over the last 3 days or so, but still remaining at elevated levels. I wouldn't be surprised if we see a pullback to retest this newly formed support at 1266 before there may be a continuation higher. Ultimately, still expecting this price action to be corrective, because the dominant trend remains bearish, and we still need to do a fair amount of work to overcome that. I was looking at Litecoin as well. That hasn't done as good a job as Ethereum and Bitcoin in completing this triangle bottom. In fact, yesterday we did see prices have a look at breaking to the upside above 60.44, but ended up posting a reversal candle or a shooting star candle, having failed to overcome that resistance. And that's not a great look for Litecoin, and suggests that maybe we'll see a move lower on that. But it's Ethereum leading the charge on the downside, down by 2.5% as things stand right now. Moving on to Commodities then, let's take a look at Brent to start with. So we've got a head and shoulders top pattern drawn on the daily chart. We did see that breakdown here on this on the 5th of July, and prices have just been pretty volatile ever since. So not giving up this being head and shoulders just yet. I think it needs to overcome this green band of resistance that I've got highlighted on the chart. If we take a look at WTI, that's formed a really neat range. We saw what looked to be a big break to the downside on the 14th of July, but the bulls come roaring back to close with a big hammer candle on the daily chart, and prices drove higher from there. In the short term, we do have a sequence of higher lows that is preventing price from moving higher. So we'll wait and see whether or not we are going to see lower prices on that. If we do get a conclusive break of this range, then we will be looking for lower prices, potentially as low as 58.16. That's the measured move of this range setup that we've got. So measuring from the high here on the 8th of March down to the low at 15th of March, projecting that lower, and that comes in at 58.16. A number of Fibonacci levels along the way that we can use for references for support as well. Looking at the precious metals, as I said yesterday, this really isn't my favorite area of the market at all at the minute. It's not really offering much. We saw silver stall around the 61.8% fib level, and if we scroll back to the left hand side, we can see there are a number of highs here which we anticipated to act as support, but it hasn't really done that. Yesterday we did see an element of buying supported by that dollar weakness, but the dollar's back on the front foot today, and the dollar gains are exacerbating the short side really on silver at the minute, and we are offside almost 1%. And for me, it just looks like it's going to continue moving lower from here on the daily chart. So be careful if you're trading these precious metals on the long side. It doesn't look particularly great for them at the moment. Similar situation for gold. Yesterday we engulfed all of the gains the minor gains that we posted on the 19th of July, and we are making fresh lows again today. We're into a 61.8% fib level as things stand, and from this black level here, black level of horizontal support, we've got a couple of key lows that we are fast approaching. So it would be interesting to see what sort of reaction we get at that level. Is it going to prompt any buying interest as it has done on 3 previous occasions? We'll have to wait and see, but that will be an interesting test for gold today. So if there are any gold scalpers out there, that may be an interesting level for you to watch and try and squeeze a few pips out of it. Copper continues to be down at depressed levels. We have seen a 61.8% fib level do a pretty awesome job actually so far, but prices have stalled. We haven't seen any major reaction to the upside. Still very much under pressure following this ski slope of a move to the downside really. It's been pretty aggressive. So while the 61.8% fib level continues to do a job, there is scope for a limited correction higher. If this level gets taken out, so the lows from the 15th of July, then we will be expecting to see lower levels on that. Okay, let's move this on to the indices then, starting off with the Aussie market, the ASX 200. So forming a sort of triangle pattern here, still got a bit of work to do, but taking out, as things stand, this low that was posted on the 27th of January, still got a bit of work to do to close above that, of course, on the daily chart, but looking pretty strong at the minute, up by 0.45%. Potential for it to move into this zone here, which is some previous lows, which you may be able to check out at 69.33. Looking at Euro Stocks 50, just because, although it's not a market we tend to look at a lot, we've obviously got the ECB today, so that will be quite an important market to watch. Yesterday, I actually sold this on the gun to the head challenge, which we'll come on to shortly, anticipating a bit of a false breakout. So we had closed above this resistance at 3591 on the 19th of July, but failed to do so yesterday, and that level still seems to be acting as a bit of resistance this morning, although we are up 0.63% so far. It was a bit of a reversal for the DAX yesterday. Looked to have completed a short-term double bottom on the move through 13,022. Measured move target of that pattern was at 13,663. and we've come up just shy of that. I've got some arrows drawn on here to indicate that we may see continued range-bound action on this, and we could target the upper end of the range, which provides obviously very good risk reward on this current setup. But we posted some red yesterday. Maybe we'll see a retest of this 13,023 level, which may attract some fresh buying interest, and we may be able to drive prices higher. I think a lot of that's going to be linked to what we see today with the ECB, so keep an eye out for that. Nasdaq was the outperformer yesterday. There was some good momentum in tech. We've seen the breakout of this triangle pattern, which occurred a couple of sessions ago on the 19th. We saw prices continue to hold above it yesterday, and we're doing the same today. We're up by 0.25% as things stand at the moment. We do have some resistance above at 12,941. Which we can check out. So that would be the next target on the upside for the Nasdaq. And if that does manage to breach above that level, then maybe what we're forming here is some sort of short-term bottom on the daily chart, which would indicate higher prices over the short to medium term. So that's one to watch out for as well. Still in a bit of indecision phase, really. I think it still needs to do a fair amount of work before we can start backing a tech rally, but it is in the middle of earnings season at the moment, so that may be the driver or the catalyst to take prices higher. So far, we've had numbers from Netflix, which were a little bit underwhelming, although we saw prices move higher. And yesterday we saw a beat from Tesla. And I'll take a quick look at the calendar in a moment to see what's next up on the earnings front. S&P 500 still got this big head and shoulders top pattern on the daily chart, which is really my principal focus, I suppose. But I'm not against the idea of things moving higher in the short term, particularly as we appear to be breaking out of this triangle pattern to the upside. Although I'd like to see a little bit more impulsiveness, I guess, to the upside with the breakout here, which we aren't necessarily getting at the moment. So that's underperforming at the minute, and so too I believe is Dow Jones. Although you could argue that's formed a bit of a triangle there. I think we need to see it take out this level above at 31912, and if we can do that, then we'll be looking for higher prices. Sorry about that. Okay, that's that for the stock indices. Let's take a quick look at this economic calendar, shall we, just to see what we've got out today and try and give us a bit of a clue about what we can expect. So let me just bring this up, just apply some filters so we aren't overwhelmed with too much information. So we want to focus on the Nasdaq, I would say, and we'll do that here with this chart or this calendar, sorry. So yesterday, as we know, we had earnings from Tesla, and the forecast was for EPS of 1.68, coming at 1.95 according to the data that we've got here, and actually adjusted to 2.27. So a really decent beat there, pretty much quite close to the forecast from the analysts. And typically in the period after earnings, we do see some pretty positive price action. So we'll keep an eye on that. Typically, news sentiment is on the bearish side at the moment, but seems to be improving. As you can see there, it's starting to lift up to the upside. So that's a fairly decent indication. So looking ahead today, we've got American Airlines on the NASDAQ, and we've got Intuitive Surgical. So they aren't exactly huge names on the tech space. I mean, American Airlines always a pretty good bellwether for the travel and leisure sector, and Intuitive Surgical obviously on the healthcare side of things. So we'll wait and see what they come out with a little later on today. And next week, let's just see what we've got on the tech side of things. So we've got Alphabet, we've got Microsoft, we've got Texas Instruments, we've got T-Mobile, Meta Platforms, Qualcomm. So a few big names reporting next week on the tech side of things, and that obviously could be pretty important for the NASDAQ index. So looking ahead to Thursday next week, we've got Amazon, Apple, and Intel all reporting numbers. So yeah, important stuff ahead for the stock indices. Okay, gun to the head trades. Let's have a look at that, shall we? So this is just a little game that we play each morning to come up with trade ideas pretty much live on the video. We place stops and targets and all those ideas. They're all placed at market. They all expire at 9 p.m. UK time or when the stop or the target is hit. If anybody wants to check these trade ideas out to make sure that we're not making it up, please feel free to do so. They're all on our TradingView profile, which is signal_center, and you can check those out. And we have been monitoring the performance of these ideas for a very long time. And I can show you that here on the spreadsheet that we've got. This is the 651st video of Talking Bull that we've done. So we've got a pretty rich history of information here. I've previously made 607 trades, obviously had a few holidays in that 651, not as many as Steve, I might add, which is all fine. But this is the performance of the trade ideas. So how we do this, we risk 1% of capital on each of these trade ideas. And so, you know, it's pretty rigid stuff. And since then, we've seen prices of the account, which is hypothetical, move up as high as 2,686. We then went through a period of not much happening. As you can imagine, through COVID, markets were very choppy, and trying to trade things on an intraday basis was very hard. But we started to trend higher after a little bit of a pullback recently, and still maintaining profitability of well over 100% since we started doing this. So, you know, it's going pretty well overall. So yesterday, this was my trade idea. I was looking for that false breakout on the Euro Stoxx 50. We only really use intraday charts to come up with these trade ideas, so we are focusing very much on the short term. If you want to click the play button to see how these things play out, feel free to do so. It moved nicely in my favor. Maybe a little bit greedy with my target. Didn't quite get down to the level I wanted it to at 3,532, but at 9 o'clock it was nicely onside. So we go by the 8 o'clock candle because this is obviously it closed at 9, and I was 1.08 R onside with that trade. So a win's a win, and I'll happily take that into today. So what am I going to trade today? Well, I've had a quick flick through some of the charts. And the one that really stood out for me was New Zealand dollar versus the US dollar. Now, if I look at this on the intraday chart, sorry, not the intraday chart, the daily chart, there is a breakout of this triangle or wedge pattern to the upside, which typically would encourage me to maybe buy on the speculative side of things, expecting a corrective move to the upside. But yesterday we posted this shooting star candle, which for me is an encouragement to maybe get back in on the short side. If we take a look at the intraday charts, this is the hourly setup. For me, it looks like we're on the verge of completing a very short term head and shoulders top pattern. We're pretty much on the neckline right now. And also we've got a bullish channel here. Although it's only very short term, we're on the cusp of breaking that as well. So when I was looking at this a little bit earlier, the risk reward was a little better. So I'm actually going to have to extend my target now to try and make this worthwhile. So what I want to do here is speculate on this breaking down and completing this head and shoulders top. If we take a measured move from the head to the neckline and project it lower, that target comes in at 61.57. But if I do that here with a stop loss above the right shoulder, I'm only getting a risk reward ratio of 1.91. And when we trade, we always want to have risk reward ratios in excess of 2 to 1. So that means I'm going to target the 161.8% extension of this move to improve my risk reward. So I'm selling this now at 62.10. It sounds like a Nokia phone. And I'm going to have a stop loss just above the right shoulder, which is at 62.42, targeting that 161.8% extension of the head and shoulders top down to 61.21, giving me a risk reward ratio of 3.18 R. So for every $100 or $10 you risk, let's say, we'll be looking to make $310 in return for that if you're risking $100, and obviously $31.80 if you're only risking 10. So that's my trade of the day. Hopefully it works out from here. It's certainly looking very nice from a technical perspective, but not all these patterns play out in the way you'd expect. So be prepared for that. Okay, day ahead, important one. As we know, we've discussed it, on a few occasions throughout the video today. We've got the ECB monetary policy decision today at 1:15 UK time. We have followed up shortly after the US jobless claims number at 1:30 UK time, as well as the Philly Fed index as well. All of these data points are being linked really to the Federal Reserve's decision on monetary policy. So pretty much everything is live and important at the moment. But then at 1:45 UK time, we have the ECB press conference, which of course is going to be well watched. They're talking about this special tool that they've got to deal with Eurozone periphery yields, and also what they plan to do in the weeks and months ahead with regards to potentially raising interest rates. So going to be a really important day today, particularly for anything linked to the euro. So if you've got exposure there, be aware it could be a pretty choppy session. So make sure you've got appropriate risk management plans in place. Okay, for the rest of the week, tomorrow we've got Eurozone and US PMI data, and then we look forward to next week where we've got Australian consumer prices, so the latest read on inflation down under, and also the latest from the Federal Reserve where they are expected to raise interest rates. So we are sort of flirting between 50 to 75 basis points, some even talking about a whole 100 basis point rate hike for next week, and obviously things will start hotting up with that the closer to the event that we get. And also, as we just looked at on the calendar, a fair few tech names and big companies in the US will be reporting their earnings. So it promises to be an interesting week next week as well. That's it from me. Hopefully that was useful. There was a chap on the comments who said about making a Telegram channel. We do have Telegram channels, so if you want to come and check those out, feel free to do so. They're not, we don't give away too much in terms of our intraday analysis, but that is also available through a number of brokers. And if you want to reach out on Telegram or Discord, please feel free to do so, and we can try and point you in the right direction. Okay, have a great day, everybody, and I will see you in the morning. Goodbye.